Hello learners, welcome to our session today. I am your instructor, CPA Aringo Frederick. So today's class, I can term it as a master class because concept that we are going to handle today is going to assist us anytime we are handling transfer pricing questions. Because remember in our previous class already we had introduced transfer pricing. We had looked at the methods of transfer pricing and we had the concept of transfer pricing. So today's class we want to go through some of the steps, major steps that you must always consider anytime I am dealing with transfer questions or anytime I'm dealing with transfer pricing problems. The steps that we're going to look at today, these steps, they'll always be similar in any question that you are doing for transfer price. So I believe by the end of this class, if you pay very keen attention on this and you've gone through to, maybe you've watched all of this video from the start to the end, I believe there is no question for transfer pricing that you never probably maybe fail to answer. So today's class, my good students, I want us to talk of what? Steps in solving transfer pricing problems or questions. Steps in solving transfer pricing problems or questions. As I've said, these steps will be similar in each and every question of transfer pricing that you'll ever face. So it's very important for us to listen very careful and follow each and every step that you're going to have here. So we normally tend to look at four main steps. Four main steps. So our step one, what you must always consider first of all is identify the purchasing or receiving division. This should be your step number one. Identify the purchasing / receiving division. Identify the purchasing / receiving division. So why is this very important as our first step? Because anytime we'll be dealing with transfer pricing questions, anytime we'll be dealing with transfer pricing questions, you'll find that I'll always be looking at the concept of the receiving division. Our main focus ideally will be mostly on the receiving division, which will want to look at the impact of this transfer pricing probably to the entire company as a whole. So that's why we are saying first thing that we need to do is to identify the purchasing or receiving division. That should always be our step number one anytime we are dealing with transfer pricing. Step number two, my good students, step number two. And I want you to understand it very careful. We are talking of determine / compute the contribution. Determine / compute the contribution for each proposed or forecasted demand level or selling price without considering transfer pricing. Without considering transfer pricing, without considering transfer pricing, without considering transfer pricing, without considering transfer pricing. But consider the variable cost, VC standing for variable cost, but consider the variable cost transferred, to the receiving division, consider the variable cost transferred to the receiving division. Consider the variable cost transferred to the receiving division, Consider the transfer price transferred to, or rather consider the variable cost transferred to the receiving division. So this is what we are talking about. So the moment I'm able to identify this one, it will be very, very simple for us. Remember, we are not yet done with the steps. So let me explain this. Why are we saying, or when we are talking of, to determine or compute the contribution for each proposed or forecasted demand level or selling price without considering transfer pricing, but consider the variable cost transferred to the receiving division. This is what you are saying. The concept of transfer pricing, my good students, is all about considering the price that we are transacting with each other within the organization. Price that divisions transact with each other within the organization, right? Having mentioned that one, we'll always be talking of, which by the way we had mentioned it in our first class, we'll always be talking about the receiving division and the supplying division. So you'll find that in this case I'll be having two cases. For receiving division, it will be a cost on their side. For supplying division, it will be a revenue on their side. So this time round we are talking of, we should determine the contribution for each proposed or forecasted demand level and a selling price without considering transfer price, but consider the variable cost transferred to the receiving division. Take for example this case, my good students. I'm having two divisions here, division X and division Y. Assuming that division X, this is a supplying division, and Y, this is the receiving division. This is the receiving division. So we've said we're going to identify the purchasing or receiving division, which in this case, this is my receiving division, right? We need to determine the contribution. We need to determine the contribution for each proposed or forecasted sales demand or demand level and the selling prices right? So I've already identified that my receiving division is division 1. We have our proposed selling prices and we have our demand level, right? And you know very well, for us to consider our contribution, how do we normally tend to determine our contribution? Our contribution, we normally tend to take our total sales minus total variable cost. That should give us our contribution. Alternatively, we can take our contribution to be CMQ, which you know very well that CM stands for selling price per unit minus variable cost per unit, minus variable cost per unit, minus variable cost per unit. So I want to determine my contribution without considering transfer price. Allow me to use only the first one for 600. Selling price is 600. Quantity is 3,000. So I need to determine my contribution, CMQ. So without considering the transfer price, because you're given transfer price to be 100 shillings. So without considering my transfer price, this is what you are going to take. I'm going to take my selling price, which is our selling price, which is 600, this being our selling price, right? We less our variable cost. We less our variable cost. My variable cost in this case, how much are we going to take? This is what you are going to do. I'm going to take the variable cost of the receiving division, which is 75. We add what? We need to transfer the variable cost of the selling division to the receiving division. What was the variable cost incurred? What was the variable cost incurred by the selling division here? The variable cost incurred by the selling division, in this case, we had 100. So therefore, I'm going to take 75 plus 100. This should give us a figure of 175. So therefore, to determine my contribution margin here, we are going to take, that should be 600 minus 75. That should be 600 minus 175 will give me 425. Will give me 425. Having a 425, we multiply by the quantity at that demand level is 3,000. So my Q is 3,000 at that demand level. So in that case, we'll be talking of 425 by 3,000 to give us 1,275,000. So that should be our contribution at that point. So in that case, we've not considered our transfer pricing. Actually, our transfer pricing here was 150. Take it to be 150. We don't consider the transfer price. So that should be our case. So still on the same step number 2, after I have determined the contribution under each proposed demand level or selling price, I'll also be required to come and identify the demand level, with the highest contribution margin, with the highest contribution. So I'll do this for 600, 500, and 750. Where we will have our highest contribution is the one that we are going to select. Like, for example, this case, we've determined it to be 12.5. Assuming this one, I get, say, like 2 million. Assuming the other one, I get, say, like 3 million. Meaning that 3 million will be our highest contribution. So, after we've looked at that case, that should take us to step number 3. Step number 3, what will we supposed to do? Step number 3, determine the contribution for each proposed demand, for each proposed or forecasted demand level. Determine the contribution for each proposed or demand level or selling price with transfer pricing into consideration. Putting transfer pricing or with transfer pricing under consideration. 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 The same concept. Step number 3, we are saying we are going to do this. We are going to determine the contribution. But what are we going to do? I'm going to consider the transfer price. The same scenario, we are still on our receiving division. My selling price, yes, is 600. Our variable cost will be how much? Our variable cost, I'll be having the variable cost that you are incurring, yes, which is 75. But this time round, I'm going to consider the transfer price, which our transfer price is how much? 150. 150. So that we can talk of, that should give us a 150, that should give us 225, right? 150 plus 75, that should give us 225. That should give us 225. So, after we've talked of that, now we've taken transfer price of 150. Probably a good student will ask Mwalimu, why haven't we taken the variable cost of, or will you not take the variable cost? Will you not transfer the variable cost from the supplying division to the receiving division? In this case, mark this word very correctly. This 150 that you are charging, of course, it is a price that I am quoting to the receiving division. So the 150 that you are charging here, already in this case, we have taken care of what? Of our variable cost. The 150 that X is charging to Y, the 150 here that we've taken it as transfer pricing, already they have considered their variable cost, meaning that already that 100 is on that 150. So that's why you just take the transfer price only, the figure as it is. So this should give us a contribution margin of 600 minus 225 to give us 375. So I'm going to take 375. We multiply by the demand level of 3,000. So I should be having by 3,000 to give us 1,125,000. So this is the third step that we're talking about here. Determine the contribution for each proposed demand level or selling price with transfer pricing under consideration. And ideally, this is a concept. That's a concept. After we are done with that, still on the same step, identify the demand level with the highest contribution, or identify the highest contribution. Identify the demand level, identify the demand level with the highest contribution, Identify the demand level with the highest contribution, Of course, you're talking of where I'm having the highest contribution. Actually, also in this case, you can talk of identify the demand level with the highest contribution. In that case, you're talking of this case, the highest contribution. Still the same case for step 3, identify the demand level with the highest contribution, So the same case, I'm going to do this because variable cost will be similar to all, right? I'm going to do this in all the components that you do have. So therefore, we'll be selecting the demand level with the highest contribution, So I'll just do the same to all these components. So the moment we are there, now we are on the right step, right? So identify the demand level with the highest contribution here, with the highest contribution. And our focus is, my good students, our focus is ideally on what? On the contribution. Our focus is on the contribution. Now that should take us to our last step. Step number 4, it will be to advise the company. And we can advise the company based on these facts. So we need to advise the company, So in this case, we can advise the company based on these facts. We can either advise the company based on the effect of transfer pricing on the company's profit, Advice based on the effect of transfer pricing on the company's profit. on the company's profit. Effect of transfer pricing on the company's profit. On the company's profit. So in this event, when you want to advise a company based on that, we are going to consider the following. So we are saying we are going to consider the following when you want to advise a company based on that. And this is what we are going to consider. We are going to sum up the maximum contribution. So this case, talk of a sum up maximum contribution, identified in step number 3 above. The maximum contribution that we identified it here in step number 3 above. And what? That one you're saying you're going to sum that one up. We sum that up, maximum contribution identified in step number 3 above, and talk of the contribution generated, that is a contribution generated from receiving division, contribution generated from receiving division to the supplying division, So assuming that we did all this, and maybe I identify that probably our case here, look at the same concept. Assuming we had done all these components, right? Then we achieved, or we determined, say like at 750, this is where we had our maximum contribution, which in this case was, say, assuming 3 million. We're just taking our figures, right? We're assuming it was 3 million. So we are saying that I'm going to identify the maximum contribution in step 3 above, which in this case, this is 3 million. We've taken it to be 3 million assumption, right? So talk of maybe division B, the max division Y, the maximum contribution that it can give us is, say, like 3 million. Then I'm going to add with the contribution generated from the receiving division to the supplying division. Still, you'll find that division Y, it has generated a certain contribution to the receiving division. So therefore, this is from division, contribution generated from division X, or rather contribution generated to division X. Contribution generated to division X, of course, from Y, we are talking of my selling price here is 750, correct? We less the variable cost that division X incurred to produce that product, 100. So in this case, not 750, but what we charge division Y. We charge division Y a figure of how much? We transferred these commodities to division Y at how much? At 150. So this is what we supplied to division Y. And the variable cost that we incurred in supplying the commodity was 100. Then you multiply by the number of units here, which in this case you have 5,000. So the figure that I should be having there, which in this case we're talking of 50 by 5,000, should give us, say, 250,000. So we can come and confidently say that the contribution that product or the division Y as a whole, the contribution that division Y as a whole, the one that it has generated to the company, we'll be talking of 3,250,000. 50,000. Because this is what I'm generating as division Y as it is, and this is what we are generating, which division X, which is the supplying division, is generating from the receiving division. So we're looking at it as the entire profit of the company as a whole from the receiving division. So that's the first case. Then after we've done like that, my good students, we are going to compare this contribution. So after we are done with that one, compare, this was 1, sum up. 2, compare the contribution, compare the total contribution computed in one above with the maximum contribution identified in step 2 above. Now, after we've done with the summation of this, I'm going to compare what we've determined with what? With the maximum contribution that we identified in step 2. Because recall, step 2, in this case, we were doing that without considering transfer price. So the impact will be, I compare the two. So if I'll find out that with transfer pricing, I'm earning more without transfer pricing, of course, I'm going to look at that effect. I'm going to deduct the impact if we hadn't considered transfer pricing, that was in step 2, and if you consider the transfer pricing, the other that we summed it up here. So I'm going to deduct, and that should give us the difference, and that difference is what we'll be terming it as what? As effect of transfer pricing on the company's profit, entirely as it is. Now, after we are done with that case, advice number 2 that you can look at, that one actually I'm just going to mention. So advice number 1 was effect of transfer pricing on the company's profit. Advice number 2, whether to adopt transfer price or not. Whether to adopt transfer price or not. Whether to adopt the transfer price or not. Like in this case, what are we going to do? In this case, of course, I'm going to compare whatever that we are earning if we have transfer pricing. The same concept. And whatever that we are having if we don't have transfer pricing. So where we are generating the highest contribution is the one that we're going to take. Meaning that I'm comparing the contribution in step 3 and contribution in step number 2 above. The maximum contribution identified in step 2 and the one that has been identified in step 3. So if I realize that with transfer pricing I can have higher contribution, why should I go with the one without transfer price? And if I realize that if I adopt transfer price, my contribution will be, probably is going to be reduced, or my contribution will be less compared to the other one. Why should you then not take the transfer price? So basically you'll find that in that case, it just be a matter of us advising based on all these concepts. So long as you've mastered these steps, my good students, trust you me, even now you can take your paper. Look at the question for transfer price. Try to follow the steps I've given you. You will tell me exactly that mwalimu hapa ulinionyesha njia. Ulinifungua macho. And a lot of students, they normally tend to say that transfer pricing questions are very hard. It's only that probably you hadn't known the direction on how to work it out. But because right now you've known the direction, I want you to master these steps. And to have this very, very well, to understand this concept very clearly, I want you guys to join me in the next session. I want you guys to join me in the next session. In our next session, we are going to handle an illustration question from our past paper. This illustration question, my good students, following the same steps that we have said here, following the same steps that we have mentioned here, you will find that is going to be very easy and is also going to open our mind wide. So kindly, join me in the next session where we are going to handle an illustration question from our past paper regarding the transfer price, and you'll find it to be very, very easy. So to that juncture, thank you so much, and let us meet in the next session.